All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and today is October 11th. And so really, once again, how do we want to classify today? Very whippy price action once again. Disappointing price action. A move off the lows this morning. It's about 7 o'clock this morning, where the lows from where we were at that point, and then we had a nice move till about 11 o'clock today, and breath was very strong, very nice, and then the bottom just basically fell out, and nothing, no news or nothing that really hit the tape, just continued selling throughout the session. So risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice or recommendations. You can read the full risk disclaimer here. And if the screen is a little bit blurry, it's just because YouTube takes a little while to render these videos. So let's talk about the price action for the day. But very difficult when you see something like this. A really, really nice bounce starting out at around like 8 o'clock this morning, that continued through the open, and we hit the high of the day around 10:25. A little bit of give back, which is normal, and then we started to kind of move back up again till about 11:40. And that was it. A complete move down and just methodical, move down, not anything more than that, I would say, and up until about 2 o'clock, even it looked like the market was trying to, retrace some of that move to the downside, and then, just complete waterfall down for the last hour of the day. So what's going on here, right? When you see this type of price action, well, there's always a couple factors at play, right? Today is Columbus Day and the bond market's closed, so the price action can be whippy, like the beginning of the day and especially towards the end of the day. But just in summary, you kind of have to think about, when you're a retail trader, and of course when you're an institutional trader too, what everybody else is doing, specifically the institutions, right? They're the ones that are really going to push around this market because they're big. And so what has been happening here is they're selling, right? They're, for whatever reason, and I think there was someone on that I was listening to on Bloomberg TV who works, I think he's from Putnam, which is not a name that I've heard in a long time. It's a mutual fund, right? And the mutual funds used to really kind of drive the markets. They were bigger, back years ago before there was ETFs, because that's mainly what people were doing was mutual fund investing. But the mutual funds still have size to them. And, specifically towards the end of the day, we're seeing these heavy sell imbalances, right? MOC, market on close. And, we certainly saw this a number of days last week, and we saw it again today. So, and how do you know that it's mutual funds? Well, because mutual funds, you can't trade mutual funds during the day, right? You can only get their net asset value, which is determined by the closing price, right? That's why so many orders have to go down for MOC, because they need to get the closing price. That is when they are redeeming, or that's when there's new funds going in. So they have to buy when that happens. But what we're seeing is just a lot of selling and a lot of exiting of equity positions right now, and that is being done by, I think, both institutions, maybe hedge funds, and the mutual funds. And that's what this person that I listened to on Bloomberg was basically saying, was that we've had our 5% correction, but there's a lot of risks out there that are a little bit different than what we've been hearing about, and that's spooking some people, right? You're hearing about every day or every other day, you're hearing about some other commodity that is just going up, right? And the commodity rally that we're seeing, we've seen a number of them. Obviously everything in the energy space has been going up. The agriculture space has been going up. supply chain issues. So some of these hopefully will be temporary. We'll just kind of have to see how it goes. And there's some things that, if you look at this chart for S&P, when we back this up and we look at the 1 hour chart, and I think actually the daily chart is where I want to look at. I drew this downtrend line last week, and you could see that we are having difficulties with that. So that's just a downtrend line. We've also slipped back below value for the by the close, right? So we lost this. We're losing this bounce. And so that was one of the scenarios that we talked about. I think towards the end of last week. I also talked about this in the member weekend video as well. It's not the scenario that I wanted to see, and I'm going to talk about that specifically in Nasdaq. But the other thing to notice here is too, we didn't even get up to the 50-day moving average, and the 50-day moving average can be a great signal. We've talked about this before. And we've been giving this market some patience to kind of reclaim that 50-day moving average, but we're starting to kind of lose that. And what will eventually happen with this 50-day moving average is it will start to curl down the longer that we're below the 50-day moving average. So, again, I kind of point back to what happened last September and October, right, where we kind of had. Now we are doing something different, but I thought we might have something a little that vaguely resembles this. Now, again, we didn't get as overbought as we were. You could look at the RSI. We really got heated at the end of August, right? And that kind of caused, once you get that heated, it could be those stairs up and escalator or elevator down. We bounced quite nicely, and then we visited those lows and actually made a higher low. So that's kind of something that I want to stay focused on here for a second. When this happened, again, a higher low, we could be, and that was one of the scenarios. I think I talked about 3 different scenarios that we could get in the coming weeks. One of which is a retest of these lows, and what we want to see is a higher low. If we start to come down here, we've got some problems, right? And that's going to be tough. That's going to be tough sledding. So we might spend a little bit more time than the usual dip that we've had, in the last couple of years. So Nasdaq, we weren't able to kind of get as nice of a bounce there just because the sell-off has been a bit more. But you could see we've ran out, a couple times here. We tried to explore, a bigger bounce and not able to get over this 20-day moving average. So again, short-term trend is down right now, and we don't know where this is going to end up, right? Of course, no one has a crystal ball, so you got to be a little bit more, in my opinion, just have to be defensive until this plays out, right? And the more that you can kind of sit on the sidelines when this happens, the more that you are going to be ready and fresh to kind of get back to things. But this was a tough one today. I finished positive for the day, but I had a really, really nice day going earlier. So that's just sometimes what happens. I always take targets on things, and that's why I am up on the day, is because I did a number of selling into strength. But if you would have asked me, if I could go back in time, I would have taken off a couple trades, or maybe not have added one trade into today's strength. But it's tough, and it's a little bit of having to retreat a little bit when you don't see what you're getting, or when you see this type of selling pressure. But that's fine. Positive is a positive day, and if I have to retreat a little bit and sell some positions, even fresh ones that I put on, so be it, right? We can't control this market, and we can't, out-muscle this market or be stubborn, right? We got to just, remain very flexible with what this market is telling us. So I'll go into a couple other areas, but another thing to kind of note, right? I talked about breadth, I think at the beginning of this video. Take a look at this, right? The last 3 days. You could see this on the bottom of your screen. right? But here's, we started on, remember Thursday, super strong. Breadth was really nice, and we gave it back. And, there was weakening throughout the session, right? And that's this session. Friday was kind of all over the place because of that jobs number, but same thing, a weakening throughout the day. And this is kind of, you could see this this red line, which I think is ARCA, which is mainly ETFs. You could see what happened here. And again, this is not just for the Nasdaq. This is breadth, the whole market, right? So don't think that this breadth is just for what we're seeing in Nasdaq here. It's the whole market, and it's separated by exchange. So yeah, that's pretty ugly, I would say, to see this type of thing. And again, I try to give a little bit of explanation about that. It is funds that are taking advantage of some strength too, and they're selling into the strength. All right, so let's talk about a couple areas of the market. I don't know, Russell. I don't think before, Russell was leading today a bit for a little while, and that is still sideways. So again, eventually this thing is going to break. That's all we can say for now. We've got levels to watch in here. I wanted to talk about oil and some of the sector rotations that we saw today. So first of all, so I've been long, I've been positioning in the energy space. I've had about, depending on the day, about 2 to 4 different positions on in the energy space. And, that was on our watch list coming into the week. But hey, this move up to 81 was where I thought oil could get to in the short term, 81.85. So again, virgin point of control, right? We rally up to that, we take it out, and it's a bit of a fade, right? So again, this is volume at price. And, this is very new to some people. It took me a while. We developed this indicator for a number of years. But when I was an institutional trader, I didn't trade with an indicator that looked at volume at price. But it does, it does go back to, even though I didn't have an indicator to trade using that, I knew that that's how institutions do a lot of their trading. They care at certain prices and they return to certain prices. So the fact that we return to a high volume area that we haven't seen before, oftentimes we rally up to that level, take it out, and we fade. Right now, I don't know if it's not 100% that we fade, but you could see we did take it out, and we kind of moved back away from there. So there isn't, and when there's one right behind it, sometimes we often take a couple of these things out, but there isn't another one up to 93. I decided this morning, and we went over this in the pre-market Tribeca Trade Group pre-market session, that I was getting out of my energy positions. I think I left one position on BP that I've got on, but you could see right. I sold this one. I took target number 2 in this one. I'm out of Oxy. Sun is I got a portion of this trade left on here, which I've already taken 3 targets in this one for more, for a double. So that worked really well. So yes, I've got my last piece of a couple trades on in the energy space. But yeah, I thought this was a great opportunity to sell into. I also came in along some China Internet, the China Internet ETF. We saw a lot of bullish positioning in this on Friday. But look at where this finished for the day, down 20 basis points, right? So I'm just in this one. Whenever I trade something that's in a downtrend, right, that I think has a chance to have a nice bounce, I'm out very quickly, right? I'm not there to look for a trend change. I'm there to play a bounce, right? It's for a trade, and that's it, right? BABA was a good example of that. Where did BABA get to? Resistance, right? Take a look at this, and again, I said this pre-market, so I'm not making this up. I talked about this pre-market, and I said 172. I said, look at this thing. Take this VPOC out. That's a great place to sell. And it's down about $9 from there, right? So again, Market Web's indicator, volume at price, telling us everything that we need to do that we need to know on some of these trades. Now, I was not long this one, but I was just telling people, hey, be mindful of that. And it's basically you had two areas of resistance. Two similar levels on multiple time frames. On that 1 hour chart, you had the virgin point of control, and on the daily chart, you've made it all the way through the value area. 80% rule complete, and that's it. That's probably the end of the trade for now. Well, and let's see if it kind of consolidates for a little bit. But I'll say it again, and again, I'm not a crystal ball reader, but I do know that it is very difficult for names, once they're in a trend, to reverse that trend. It's very easy for them to have a bounce and a bounce into resistance, which is what you have there, multiple time frames. So we'll watch, and I would say if you're, it doesn't mean that you can't pay attention to this name or that you shouldn't, but I would set an alert at like 172 and see if it can, and watch what it does at that level, right? That would be an area that this thing would need to reverse. So we'll see, but we'll keep an eye on it. All right, so that's the second area. The other area that was super strong today was solar. And it's still finished up. The solar ETF still finished up 3.6%. So this will be something to watch for tomorrow. Again, did not close on the highs. Run was one name that I was watching. Sunrun. Very close. So I'll be watching that name again tomorrow. Notice that what it did, it's giving us a hint. It did not close above value. It explored a higher level, and it did not close above value. It just did not have enough power to do it. So tomorrow, I would watch 45.80 for Sunrun. All right. SPWR has been the beast in this group. Right. This was up 9%. Very nice. First Solar also has been acting very well. And First Solar, let's have to wait for Thinkorswim for a second. That just barely did close above value. Okay, so it's got a chance. Telling me it's got a chance. Above 101.30. It has to take out this previous high, but up almost 4% for the day. That's strong. All right. Next group. So I talked about energy and how I was selling energy. We'll see if I'm right about that in the next couple days. The agriculture space, still strong. Right? I took another target, and I've got a couple trades on in the agriculture space. ADM, Archer Daniels Midland, up 1% for the day. CF Industries also finished up 1.8%. Again, kind of tough because I think this one was up to 63.40. So it's out of the flag, not the best looking move out of the flag, but it's above all those short-term moving averages. So we'll see if that trend continues. So strong there. The banks, let's talk about this group. Geez, what a pain in the neck this group is. Look at SIVB, out of the flag. Similar to what we were just looking at, but finished down on the day, right? All the way up to 692, closed at 666. And I think that's enough of a warning signal because, listen, I tried, I'm still long some KRE, which I did not exit today. I'm going to give it a chance, but that's not a good looking candle for the day. I also tried some ALI today, which my level for this was 54. I always have a lot of alerts set at key pivot areas, but unfortunately, just a lot of intraday fake outs today, and I dumped this position. I'm like, hey, this needs to close above 54 for me to give this a shot. So fooled by this intraday. One more in the land of fades. Boeing looked great early on. Closed flat for the day, but man, what a crusher. Looked great. Got above intraday. Again, intraday. Closing print. This is why the closing print is always so important. Is the most important. But looked great intraday. Up over 230. Looked like we were going to have a nice turning the corner of Boeing, and the bottom fell out. With everything else, but. I mean, that's just ugly, right? But I took targets in this thing. So, if we go to some of these things that I just mentioned, LVS was a trade that I had on from last week. this worked perfect. I just thought that this had a chance to rally. It's got more exposure to Macau than a name like MGM. So I was able to make this into a double, short-term trade. So in and out of that very quickly. And I thought MGM had a chance today too. This finished flat. Again, I'll continue to watch this. Alert goes off. You look at it. This one I didn't take a trade, but I'll put the alert right back and be looking for a move over 45 because the price action is getting pretty tight. So this one just may require some more patience. Mentioned this one already. K-Web. Plug. Again, I was looking for alternative energy stuff today. So we'll see if that trend continues. I don't think this did anything crazy other than, it closed right at the top of value. So that's enough of a reason for me to hang on to it for another day, and we'll see how that goes. But yeah, here's my targets in Boeing. Last one I hit was 11.52, target 2. So I'm out of 50% of the trade, and it's right back to where it was marking basically Friday or the beginning of the day. The exchange stock. So a couple other things you could see. I got out of Valley for a loss. As I mentioned, if you have to retreat a little bit to fight another day, to me that's what you have to do right now in this market. The exchange stocks again look great in the beginning of the day. This did not close above value, so I decided to get out of SIBO. That failed as well. I mean, going right back into value. So it just tells you that you do not have a signal right now. Now, I took a couple targets in this one, and I hung on to the balance. But, just like I mentioned with another name, I'll hang on to it for another day. Very disappointing when you see that. So listen, you could hear me, chuckling about it. There's nothing you could do. You can't control that happening, and yes, it's disappointing. Do I wish I would have sold the whole thing at 202 today? Sure, but you don't know that that's going to happen. And there was a good point that was made early in the room that you kind of have to think about this market right now in terms of a little bit more day trading. This is a point that we made last week too, but you got to think about this market a little bit more day trading than swing trading. My bread and butter is swing trading. That's the majority of what I do, but I do change with what the market is giving us, and right now it's awfully better to be a day trader and to be super disciplined in that process or in that type of trading. Because you could easily in this market turn winners into losers the way that this market is just changing directions. So that's it for the day, and I think that's kind of the main point to think about, that if you are trading in this market, day trading is working very well, a disciplined approach to day trading, and you can be trading things on both sides. I would say that we are continuing to see some names break down. That was one of the themes that I talked about in the weekend member videos, is that I saw a lot of names that bounced right into resistance. And it looked like many names were getting rejected towards the end of last week, especially like in the growth area of the market. We're starting to see, now that those things got rejected, now we're seeing some of them go ahead and take out the lows, which is not very good. Take a look at like SE, for example, right? This thing, also, a very high quality name in the past, right? Also, moving to the downside here. Look at this one, Melly, right? No bounce last week and just continuing to move down. So there's a lot of ugliness out there right now, and we'll just kind of have to watch where some of these things go, and the better that you can kind of stay out of the way of these things going down, and you have to kind of wait for some of them to find a place where they're going to move, because these moves, some of them are ginormous. I mean, this stock was trading at, just about a month ago, was trading at 1900. It's down 500 points since then, right? And where's this going to land? maybe 1300. The way that this thing is moving. So, this is not a market, in my opinion, to be like, oh, I'm going to continue to buy the dip, right? Because some of these things just keep dipping, right? And you will put a big hole in your P&L if you have that mentality of just blindly buying the dip, in your trading account. In your long-term account, maybe you're scaling into things like in your 401k plan, right, where you buy a little bit every couple of weeks. That's a different story where you've got could have a 20, 30-year time frame. But in your trading account, you could really do some damage in your trading account by not being disciplined. So that's really the lesson, and one of the things that has helped me over the last few years is just to remain super disciplined, where you're really limiting your losses, right? And that's how most professional traders function, is that they are getting out of their losers very quickly, and not letting them pile up. All right, guys, I'll leave it there. Much more to talk about tomorrow in the pre-market session, so we'll be going through that. What the last area that I thought, I forgot one other area. We'll be watching Home Depot. Again, Home Depot looked like it was showing some signs of life here, and then just succumbed to everything, that weakness. Same thing with Lowe's, closed right at the top of value. And also looking at some of the lumber names. LPX, is a name that I'll be watching tomorrow. Also, Weyerhaeuser was strong, but this took out, it almost took out a virgin point of control. Right. Another name that in this kind of space is RFP, super strong too. That did take out a VPOC, right? Up 8% for the day. Resolute Forest Products. All right, guys, have a great night. See you tomorrow.